Well, one of Australia's top fund managers, David Paradice, has been stock picking on behalf of future generation for the better part of the decade, alongside the likes of Jeff Wilson and Phil King, to help mark future generation's 10th anniversary. We're pleased to welcome Paradice Investment's MD, David Paradice, to the program. Great to have you with us. Let's just take a step back and tell us why you've been working pro bono for Future Gen.
Well, it's a great cause. Jeff and I discussed it many years ago, 10 years ago. And we felt that the obviously massive benefits from such a concept, which is raising money. Then you get a number of fund managers which manage that money for nothing, and the fees that we would have got, we donate back to various charities. And there's 14 charities, and having a multiplier effect on about 5 million children. So it's been a really nice thing to do.
Yeah, a lot of value, as you say, and a lot of, I guess, feel-good momentum too. Tell us what you've seen in the past decade and some of the returns that you have been able to help give back.
So, I mean, it like I said, it crosses 14 children's charities, and it's probably $86 million which has been donated across to those charities. The work that's been done by Future Generation has been excellent. In other words, going through the charities, making sure the money is being spent or used correctly. And so the massive multiplier effect from that. It's a group of money managers such as myself that are managing money with a bit of a small cap focus. And we as a house do see small caps which have underperformed for probably 20 odd years now in valuation terms. It's not a bad place to be, and Future Gen is kind of tilted towards that way, which I think is a good thing.
So tilted towards some of the small caps?
Yes.
Where do you see markets track in 2025, particularly as we come to terms with the likelihood, well, not the likelihood, the actual realisation of a second Trump presidency? So
it would appear that the US consumer, which accounts for a lot of GDP, seems to be quite strong. Their balance sheet seems to be okay. They seem to be saving okay. Unemployment is reasonably low at about 4.4%. Trump, as he said, is very pro-business. So longer term, we're quite positive on the market and where equities are heading at the moment.
I was talking to a previous guest about the likelihood that there could be some more cross-border M&A too. Do you sort of see that as a potential theme for 2025?
Yes, there hasn't been a great deal, but with the currency the way it is, and also the strength of various people's balance sheets, we can see that. We can also see possibly the IPO market freeing up a bit, which is in line with a more of a buoyant market. So yeah, we can see that.
And in terms of US equities, I mean, obviously been hitting records since Trump was re-elected. Does that thematic continue, or does it pair off a little?
Well, the valuations of a lot of those big stocks are quite high. They do continue to make money. And if you look back at 2000, back in 2000 when there was the boom there, you know, stocks, the top big stocks were trading at, 50 odd multiples. At the moment they're trading on 25 multiples. There's a lot more cash on the balance sheets and the margins are a lot higher. So there is some merit behind those big stocks. Not only that, a lot of the guys that are involved with those big stocks are close to the presidency, so you wouldn't think there'd be any decisions which would be made which would work against those particular stocks. But no, it's looking okay. I mean, we do think that the valuations, the difference between small caps and large cap stocks, the valuation differential is at a 20-year high. So you would think that if the equity market continues to bubble along, the economy continues to bubble along, then then small caps is not a bad place to be.
So is that your main theme as you move into 2025? You've touched on small caps, potentially the IPO market opening up. What else are you?
You would have seen that there's this massive energy transition issue at the moment, where data centres forecast to be about 40% of electricity usage in the US. Residential houses are about 15, commercials about 30, so it's a big number, which has come from like next to nothing over the last few years. So we're quite keen on some, and the energy users want to be using clean energy, so we're reasonably keen on uranium. However, we've got a few positions in uranium and the clean energy side of things. Some of the initiatives that might be held in America are inflationary, so that could be positive for the gold side of things. We are sceptical about possibly some of the valuations that are going to be paid for data storage and the data centres, so that's an area of concern for us.
When it comes to that overall thematic too, we're waiting for NVIDIA, the big poster child of AI, to come through with its numbers. We've also got, of course, President-elect Donald Trump putting Elon Musk in charge of this new Doge department. What do you look at in terms of some of these AI makers or the likes of EVs as a potential trade too?
Well, it's all, I mean, I don't know anything about what they're worth, but it's about, in a lot of good companies, what happens is after a period of time when the market puts them into the darling area of stocks, then the valuation multiples come up, and the really good companies, the cash flow and the earnings come after it. So yeah, I mean, we'd be interested to see what numbers come out of these particular stocks. There is a lot of capital expenditure happening, as I said before, on data centres and growth. So that's also something that needs to be looked at. It's not so much the net profit bottom line, but it's also where the cash is going to.
Let's talk about the lay of the land in funds management in Australia. You have been touted as potentially being interested in merging with Platinum. What's the latest on that, and how are you sort of seeing the overall outlook?
Yeah, they're a good bunch of guys, and you know, they have got negative funds flow, but I think the guys can turn it around. Look, everybody's looking at it. I'm just one of many other people. We're just one of many other people looking at it, and we haven't formed a view yet as to which way we'll go. But even if there doesn't corporate activity, I think the people that are inside that business have got a great ability to be able to turn the numbers around and turn the flow around. So I think they're doing initiatives which will result in that. It is interesting that the government have forced a lot of the super funds to be very cost conscious, which is fair enough, and that has an effect on the way portfolios are structured nowadays, where there's more risk off the table, I suppose you could say. So that's creating rationalisation within the funds management group as people want to bulk up because costs are not going down, but revenue is. So it's not an easy market.
Yeah.
But, it all depends on performance, and our total focus is not about corporate deals, but about delivering really good numbers and strong performance for our clients.
And just a final question, David. I mean, 10 years of Future Gen, what do you see? I know you don't have a crystal ball, but for the next 10 years?
Well, I can see the vehicle continuing to grow. It's really up to us to generate good performance. It's a really good model because you do get access to some of the better fund managers in Australia, and the returns have been, as I said, been very good, and the cause is very good. So I can't see any reason why to be negative on it, and it's run by a really good bunch of people who, as I said before, do a fantastic job. So I'm very positive towards Future Gen, and I congratulate all those involved on the initiative and the continually good job that they're all doing.